Good morning, ladies and gentlemen, and welcome to the Swiss Mining Institute conference. As we all know, reality often trumps fiction. This is the airfield in Yakutsk in Russia. They lost their gold on takeoff. Now, this is a little of what has been happening for the last 2 years. For the last 2 years, nothing has happened in the gold market. That means for 7 quarters we did nothing. That means for 21 months nothing happens. And for people who are fully invested like myself in gold mines, it's been 630 days. So a lot of speculators and a lot of investors have lost their gold. Why? Because in this world everything looks good. It is la vie en rose. Of course, if you look behind the scenes, things are not that good. La vie in black. Then we'll see the fundamentals on gold. They're still very bullish. And we'll go to the most important aspect of everything, which is stock picking. So let's take Europe. You have positive momentum in Europe. All 28 countries are growing. They've been growing for the last 5 years. Even Greece, which went through a depression, is growing at 1.6%. World growth is growing, according to IMF, the US, the world, Europe. Unemployment is receding. And even in France, they adopted more flexible labor laws. You have decreasing public deficits, 1.7% of GDP. The trade deficit of the US is still huge versus Europe. That's why I doubt the dollar can be much stronger any longer, and it should continue to go down. Trump wants a weak dollar. As you can see, this is the election day of Trump. Since then, the dollar has weakened. This, of course, is good for gold. Central banks have been lenient. They might go from very accommodative to accommodative, but I don't think they're going to be very tight. There's less political turmoil. I think that's a consequence of better economies. Extremist parties are receding, and there's less immigration in Europe. So it's la vie en rose. You have synchronized growth. Growth is, the world is growing, not too fast, so you don't have overheating, not too slow. So everything is fine, even on the political scene.
Des yeux qui font baisser les miens, un rire qui se perd sur sa bouche, voilà le portrait sans retouche de l'homme auquel j'appartiens. Quand il me prend dans ses bras, il me parle tout bas, je vois la vie en rose. Il me dit des mots d'amour, des mots de tous les jours, et ça me fait quelque chose.
So as you can see, even for Brexit, everything is fine. This is yesterday's Financial Times, and they're saying that the UK and EU agreed terms of transition. So I'll go quickly because everything's fine in this wonderful world of la vie en rose. Nobody wants to rock the Brexit boat. We're talking about 500 million people on the free trade zone. 3 million Europeans live in the UK, and 1.2 million Brits in Europe. Basically, they've kicked the can down the road. Now, Brexit, if it happens, will only happen in 2020. The only thing that I think could be a major problem is if you have if things get bad in Europe, if you have a recession or political uncertainty or social unrest, then things could deteriorate. Of course, Britain has negotiating power. The British economy is adapting. UK unemployment is 4.4% versus 8.5% in France. And if they don't do a deal, you'll revert to WTO, which is not so bad, and they will not be paying the 50 billion they supposedly owe to the European. This will not go down well with the Eurocrats in Brussels. They could go into a taxation war, and most importantly, the pound can adjust downward. And basically, it's the pound who bears the brunt of Brexit. That's an investment opportunity. Every time you have the politicians saying that Brexit is not on track, then the British pound goes down, you buy the dips, and there's probably going to be some nice trading opportunities on a regular basis. Another sign of la vie en rose, cryptocurrencies. This is the bubble of all bubbles. Everybody talks about them. There's an increasing number of merchants. There's more ICO raises. Legal safe havens are flourishing everywhere, especially in Zug with the crypto valley. And I would recommend you to read the excellent research paper from Incrementum on the subject. So cryptos have invaded the world. Here are the locations in Europe. And cryptos have been a major competitor to gold. They're on the same libertarian appeal. They've had amazing price increases, 100,000% in 5 years for Bitcoin, and just in 2017, Bitcoin went from $1,000 to $20,000. And basically, you have many of the same players. It's a huge new market, so there's commissions for everybody. There's a trading mirage. I think in this very volatile scenario, only insiders and very sophisticated traders can make money. Prices are definitely in a bubble. You've had exponential price rise. The supply is unlimited because they're coming up with new coins all the time. There's this belief that cryptos can replace fiat money. Of course, governments will not let that happen. There's technological innovation. There's the delusion of hold. There's been 5 major crashes on Bitcoin, so now a lot of the community says that you just hold and you're going to be bailed out. Lastly, and most importantly, my salsa teacher just bought Bitcoin. He's down 50%, he lost 2,500 Swiss francs. And he's a nice guy. So I think the bubble has burst. We're below the 250-day moving average. We'll see what happens. There's been 5 bubbles crashing just on Bitcoin. And if you take here, since 2010, you've had 16 days where Bitcoin went down 20%. Not in 1 year, not in 1 month, in 1 day. So Bitcoin can go down faster than our gold mines. So this leads to the main subject. Have you lost your gold? As we know, the fundamentals are still quite bullish for gold. Debt to GDP are still at an all-time high. Supposedly everything is fine in the US, but debt has been growing 36% more than their GDP. If everything was so beautiful, it would not be the case. Why would they need to increase the debt? They would reimburse the debt. We're in an everything bubble world: stocks, bonds, real estate, marijuana, cryptocurrencies. Derivatives are out of control, and there's political uncertainty. Inflation could come back. We have oil up, and core inflation is maybe starting to show something. People who are close to companies know that input costs are going up. Global liquidity is still going strong. You have low real rates, so they're going up a bit, but they're still historically low, so that's very positive for gold. Now, that was a question for yesterday. Will gold go up on Fed rate increase? This has been a pattern. Gold goes down before the rate hikes, and then on the news, it goes up. And we were really happy yesterday to see that that happened. I think yesterday was extremely important. Behind the scene, you had gold stocks starting to move up, some of the big quality names. The low in GDX was on February 9th. I think yesterday was an extremely important day. We broke from a symmetrical triangle. The gold stock index are up 3% on huge volume. I think this will mark the end of this very painful correction. This is the ultimate argument. You all know Larry Kudlow. He's a great charismatic presenter of CNBC, and he's been appointed as Trump's next top economic advisor. He's nominated. The first thing he says, he still thinks he's on CNBC, buy King Dollar and sell gold. You can go on the internet. This guy has an extremely good track record of being wrong on the markets. I hope he's going to be wrong here. Supply-demand fundamentals are good for gold. Gold production has peaked. In 2017, the supply was down 4%. It's basically because of scrap, which is down 10%. Central banks are still big buyers. Industrial uses are increasing. You have strong physical demand. And the jewelry market, which has been weak for quite a long time, is now starting to recover. The love trade. As you know, the seasonality is not too good until this summer. But seasonality, I think the idea that nothing's going to happen until August, I think that is already in the market, so maybe we can be pleasantly surprised. The key driver here is that the decline in demand was essentially linked to investment demand. Here you have the yearly change in tonnage for all the ETF holding physical gold. So you had a huge meltdown in 2013. That's where all the banks got out of their 10% allocation to gold. 2016 was good, and 2017 there was an increase, but not so much. That's in dollar terms, but if you look in tonnage, we're still near the high. So this accumulation of gold is pretty sticky. There's been an amazing inverse correlation between gold and the dollar. So gold is holding up. So why are gold stocks so weak? I've been asking myself the question. I've been asking everybody at BMO in Florida, at PDAC, and basically nobody could give me an answer with the figures. I will give you the answer now. We know gold is still an asset class. We know gold is still in a bull market. So if you take from the beginning of the year, gold is flat. GDX is down 7.8%. GDXJ is down 8%. Why is that? You have to go and look a little further down. I got finally the answer thanks to Paradigm. I think they merit the title of Broker of the Year. They're represented here by Blue Lake Advisors. And we have one gentleman over there who's part of that gang. Anyway, since the beginning of this bull market in January 2016, gold is up 23%. Canadian gold stocks are up 37%, but Australian gold stocks are up 79%. I've been in this business for quite a long time, and even an Australian broker will not persuade me that Australian stocks are much better than Canadian stocks. So why is this? Now, thanks to Paradigm, we have the figures. Marijuana. The percentage change in market capitalization of all marijuana producers is up since January 2016, an astonishing 5,234%. The turnover in the week of March 12th for all marijuana producers quoted on the Canadian Stock Exchange was 1.6 billion. It is exactly the same number as the whole turnover of the entire senior gold producers. So we all knew intuitively that some of the people holding gold stocks were selling gold stocks to go to Bitcoin or to go to marijuana, but here we have the figures. It is huge. So now that we know that, of course we know it after the fact, so it's not too important, but it does mean that going forward this is done, and now we can go back up. Historically, the gold miners have historically low valuations. We're talking about 7.4 times cash flow for 2018, and this US stock market is much, much more expensive. So here again, money should move into this sector. Okay, stock picking. The first time I mentioned any stock at my first conference here was in November 2015. Most of the stock that I mentioned are up a lot. And what's interesting to see is that the one who did less well was Nova Gold. And the reason was that this stock had not gone down as much as the others in the terrible bear market before, which proves that on a long-term basis, when you're investing in a bull market, you always do better by buying value rather than chasing the last momentum stock. In this list, I still like a lot Pan American Silver because it's the second largest primary silver producer, and it has an unbelievably strong call on Argentina. Ross Beatty is seeing the president of Argentina on a very regular basis. He believes he will get the authorization to permit the mine they have there, and long term this could practically double the production of Pan American Silver. These are the stocks that I recommended in 2016. Those which are down a lot can have incredible rallies, like Bravada Gold or McEwen Mining. McEwen, he owns 25% of the shares. The stock has gone down a lot. It started to move back up yesterday. I think that's a really nice long-term holding. International Tower Hill, that's one of my favorites. It's been thoroughly researched by Paulson. And by the way, we've had a stunning news yesterday. Paulson has closed its gold fund. If you want a contrarian, if you're looking for a contrarian indicator for the gold market, I can't give you anything better. Paulson shut down his gold fund. So I don't know if that can have an impact on the share short term, but this is a fantastic, this stock can easily go back up to their highs. They've made tremendous progress in reducing their costs, which are they're probably break even now around $1,300. Balmoral, you have the best of both worlds. You have a huge nickel resource, which is valued by zero by the market. And they also have a high-grade gold project in Canada. Here again, the stock gets flat on its back. These are the stocks that I'm very bullish on silver, as some of you know, because it's very simple. In a precious metal bull market, silver always goes up more than gold. 5 minutes. Okay. So first, Majestic. That is the high beta stock. Mag Silver, this is the quality exploration company. Almaden Minerals, they have a huge resource, and they have an excellent PEA, an excellent pre-feasibility study, and now, as of last night, an excellent feasibility study. The market does not even read the news, I guess. Endeavor Silver, they're going to have huge production increase, and they are also in a turnaround mode. The stock has started to go up. Great Panther also could have a nice growth production profile. It can go up, the production could easily go up by 75% by them putting up a new mine in Peru. Abra Plata is ridiculously valued. That's a small cap. The market cap is $20 million. They just came up with a PEA, which shows a net present value of $200 million. Orcana, same thing, ridiculously low valuation in the same area. $120 million have been spent on this project, and they could go into production for a very small capex, somewhere around $20 million, and be in production within 9 months. Kootenay Silver, great exploration story, as well as Dolly Varden. First Majestic, if you buy it now, you're not buying it at the high of Apple. Uranium stocks, I think that is also, these are good long-term holdings. The production, the spot uranium is flat on its back, and the Kazakh want higher uranium prices. They control the market, they'll get it. One of the funny ways to play the battery market would be Nickel Creek Platinum, a very low market cap, $70 million, but in the ground they have $23 billion. It's a world-class asset, $2 billion of nickel, pounds of nickel, 1 billion pounds of copper, 6 million ounces of PGM, 121 million ounces of cobalt. They're in the Yukon, great shareholders, Electrum, that's Tom Kaplan, Resource Capital Fund, Tocqueville. They're repositioning the company. It was positioned as a platinum company, but in fact it is a nickel and copper company. They're on the road, they'll get the price up. Here again, this stock could go up 20 times. Cornerstone Metal, they have one of the best undeveloped vanadium deposit. The market cap is ridiculously small. It could move. Sand Spring Resources, they're presenting here. They have 10 million ounces of gold in Guyana. They're valued at something like $6 an ounce in the ground. Transition Metal, they're presenting here also. I think they're going to be transitioning now to much higher prices. Why? They're a great prospect generator. They're going to be spinning out a private company, Canadian Gold Miner. They'll be also doing an IPO on their subsidiary at the end of the year. The CEO was nominated Prospector of the Year in 2004, and they have an option agreement with North American Palladium. So, ladies and gentlemen, I hope you have not lost your gold, and if you did lose a bit, it's time to reload the plane. Thank you very much.